In this chapter, we will cover other assurance services such as reviews, compilations, reports on service organizations, examination of prospective financial statements, and agreed-upon procedure engagements. At the end of Chapter 25, you should be able to do the following. You should be able to understand the level of assurance and evidence requirements for review, compilation, and preparation services. Be able to describe special engagements to review interim financial information for public companies. Distinguish the American Institute of Certified Public Accountant attestation standards from auditing standards and know the types of engagements to which they apply. Be able to describe engagements to report on internal controls at service organizations. Be able to understand special engagements to attest to prospective financial statements. Be able to define agreed-upon procedure engagements. And lastly, be able to describe other audit and limited assurance engagements related to historical financial statements. We will begin by understanding the level of assurance and evidence requirements for a review, a compilation, and a preparation service. The statements on standards for accounting and review services represent the standards for preparation, compilation, and review engagements of financial statements issued by the Accounting and Review Services Committee of the American Institute of Certified Public Accountant. Because the assurance provided in a preparation, compilation, or review engagement is considerably below that of an audit engagement, less evidence is required for these services, and they can be provided at a lower fee than an audit engagement would be. Figure 25-1 in here illustrates the relationship between evidence accumulation and assurances attained from performing another assurance engagement service. For example, a compilation service requires a minimal amount of evidence and no level of assurance is provided by the certified public accountant or the CPA firm. In contrast, a review requires a significant amount of evidence, but the level of assurance provided will be limited in comparison to an audit engagement. An audit requires an extensive amount of evidence accumulation and thus provides a high level of assurance to the user of the audit report. You can find figure 25-1 on page 800 of your textbook. A review services engagement allows the accountant to express limited assurance that the financial statements are in accordance with the applicable accounting standards or other comprehensive basis of accounting. Procedures suggested for performing reviews engagement consist primarily of inquiries of management and the performance of analytical procedures. For reviews, accountants do not obtain an understanding of internal control. Accountants do not test controls. They do not assess fraud risks or do substantive tests of transactions or tests of balances. Statements on standards for accounting and review services requires the auditor to obtain the following when performing a review engagement. The auditor must obtain agreement on engagement terms with the client. The auditor must obtain knowledge of the accounting principles and practices of the client's industry. The auditor must obtain knowledge of the client, make inquiries of management, perform analytical procedures, read the financial statements, reconcile the financial statements to underlying accounting records, obtain letter of representation from management, and lastly, the auditor must prepare documentation that is sufficient in detail to support the work performed, evidence accumulated, and conclusions reached for the engagement. The standard review report includes 4 paragraphs. The first paragraph is the introductory paragraph that identifies the entity, the period of financial statements subject to review, and explicitly notes the accountant has conducted a review engagement. The second paragraph specifies that management is responsible for the preparation and fairness of the financial statements and for designing, implementing, and maintaining internal controls relevant to financial reporting. The third paragraph of the standard review report includes notes that the accountant's responsibility to conduct a review of management's financial statements in accordance with the review standards. It should also include the heading that states accountant's responsibility. The fourth paragraph of the review report, which is preceded with the heading accountant's conclusion, expresses limited assurance in the form of a negative assurance that the auditor is not aware of any material modifications that should be made to the accompanying financial statements. The date of the review report should be the date on which the accountant has accumulated review evidence sufficient to provide a reasonable basis for the report conclusion. An example of a review report is shown in Figure 25-2 on page 803 of your textbook. If a client has failed to follow applicable accounting standards in a review engagement, the report must be modified by the accountant. Suggested wording in the modified report would include known departures from accounting principles generally accepted in the United States of America. Then a description of the departure from the principles is provided on the report as well. A compilation engagement is defined in the Statements on Standards for Accounting and Review Services as one in which accountants apply accounting and financial reporting experience to assist management in the preparation of financial statements and issue a report to a client or a third party without providing any certified public accountant assurance about the statements. The requirements for compilation include establishing an understanding with the client in a written engagement letter about the objectives of the compilation engagement, possession of knowledge about the accounting principles and practices of the client's industry, and knowing the client, the nature of its business transactions, accounting principles and practices, and the content of the client's financial statements. Other requirements for compilation also include making inquiries to determine whether the client's information is satisfactory, reading the compiled financial statements, and being alert for any obvious omissions or errors in arithmetic or in the application of accounting standards. Requesting management to provide additional or corrected information if the accountant becomes aware that the records, documents, or explanations are incomplete, inaccurate, or otherwise unsatisfactory. Preparing documentation in sufficient detail to provide a clear understanding of the work performed and any findings or issues that are significant. And lastly, requesting management to revise the financial statements if the accountant becomes aware of any needed revisions. The statements on standards for accounting and review services define three types of compilation reports. The first type is the compilation with full disclosure. Second is compilation that omits substantially all disclosures. And third is compilation without independence. The first type of report is illustrated in Figure 25-3. The second type of report is illustrated in Figure 25-4. Both figures can be found on page 805 of your textbook. The use of each depends on whether management elects to include all the required disclosures with the financial statements and whether the accountant is independent from the client. In a preparation service engagement, the certified public accountant is engaged by the client to prepare or assist in preparing the client's financial statements. But the certified public accountant does not provide any assurance on the financial statements, nor does the certified public accountant issue a report on the financial statements. The certified public accountant's responsibilities when performing a preparation service are similar to those performed in a compilation. The key differences are the certified public accountant does not issue a report, and the certified public accountant does not need to assess independence. Moving on, we will cover on the next slide special engagements to review interim financial information for public companies. The Security Exchange Commission requires that quarterly financial statements be reviewed by the company's external auditor prior to the company filing of the Form 10-Q with the Security Exchange Commission. Because the same certified public accountant must perform both the annual audit and the quarterly reviews, they are referred to as auditors, not accountants, for the interim review. Like a review under the Statements on Standards for Accounting and Review Services, a public company interim review includes the same 5 requirements for review engagements. However, the two types of reviews have the following differences. First, the auditor must obtain sufficient information about the client's internal control for both annual and interim financial information, because an annual audit is also performed for the public client. The second difference is the auditor's knowledge of the results of the annual audit procedures is used in considering the scope and results of the inquiries and analytical procedures for the review. The third difference, under the Statements on Standards for Accounting and Review Services, the auditor makes inquiries about actions taken at directors and stockholders meetings. For a public company, the auditor reads the minutes of those meetings. And lastly, the auditor must also obtain evidence that the interim financial information agrees or reconciles with the accounting records for a public company interim review. An example of a report for interim financial statements for a public company is shown in Figure 25-5 on page 807 of your textbook. In the next slides, we will distinguish the American Institute of Certified Public Accountant attestation standards from auditing standards and know the types of engagements to which they apply. In an attestation engagement, the certified public accountant reports on the reliability of information or an assertion made by another party. The American Institute of Certified Public Accountant has issued 11 attestation standards that are stated in sufficient general terms to enable the certified public accountant to apply them to any attestation engagement. These generally accepted attestation standards are detailed in Table 25-1 on page 808 of your textbook. To provide additional guidance, the Auditing Standards Board of the American Institute of Certified Public Accountant issues statements on standards for attestation engagements. The Auditing Standards Board decided not to attempt to define potential boundaries of attestation engagements in conceptual terms because new services are likely to arise. Attestation standards define 3 levels of service. The first level of service is examination. Examination results in a positive conclusion, which is expressed by the certified public accountant in the form of an opinion. An example of this report is included in Figure 25-6 on page 810 of your textbook. The second level of service is a review. In a review, a certified public accountant provides a moderate level of assurance that is expressed as a negative assurance conclusion. The third level of service is an agreed-upon procedure. In an agreed-upon procedure, the degree of assurance varies with the specific procedures agreed to and performed by the certified public accountant. The types of engagements and related reports are shown in Figure 25-7 on page 810 of your textbook. Moving on, we will discuss about engagements to report on internal controls at service organizations. There are 3 types of service organization control reports, which are referred to as Service Organization Control Report 1, 2, and 3. Service Organization Control Report 1 reports on controls at a service organization relevant to users' entities' internal control over financial reporting. Service Organization Control Report 1 is intended to meet the needs of entities that use service organizations and their auditors who are responsible for understanding internal controls over financial reporting at service organizations. There are 2 types of reports on controls. Type 1 report is a report of management's description of a service organization system and the suitability of the design of internal controls. And Type 2 report is a report of management's description of a service organization system and the suitability of the design and operating effectiveness of internal controls. Service Organization Control Report 2 is a report on controls at a service organization relevant to security, availability, processing, integrity, confidentiality, or privacy. The auditor uses the criteria in the Trust Services Principles for evaluating and reporting on controls in these areas. These are shown in Table 25-2 on page 812 of your textbook. Service Organization Control Report 3 is a Trust Services report for service organization. It is similar to the Service Organization Control Report 2, except it is intended for wide distribution to current or potential users of the service organization. On the next slide, we will discuss about special engagements to attest to prospective financial statements. Prospective financial statements refer to predicted or expected financial statements in some future period or at some future date. Most certified public accountants believe that there are significant opportunities and potential risks for auditors to provide credibility to prospective information. The American Institute of Certified Public Accountant attestation standards define two general types of prospective financial statements. The first type is a forecast. A forecast are prospective financial statements that present an entity's expected financial position, results of operations, and cash flow. The second type is what's called a projection. Projections are prospective financial statements that present an entity's financial position, results of operation, and cash flow, given one or more hypothetical assumptions. Prospective financial statements are prepared for one of two audiences. The general use statements are prepared for use by any third party. Limited use statements are prepared solely for third parties with whom the responsible party is dealing directly. There are three types of engagement. The first type is an attestation engagement in which the certified public accountant obtains satisfaction as to the completeness and reasonableness of all the assumptions. The second is a compilation engagement in which the certified public accountant is primarily involved with the computational accuracy of the statements, but not the reasonableness of the assumptions. And the third type is an agreed upon procedure engagement in which the certified public accountant and all users of the financial statements agree on specific limited attestation procedures. In an examination level engagement, the certified public accountant evaluates the preparation of the prospective financial statements, evaluates the support underlying the assumptions, evaluates the presentation of the prospective financial statements for conformity with the American Institute of Certified Public Accountant presentation guidelines, and the accountant issues an examination report. What is an agreed upon procedure engagement? When the auditor and management or a third-party user agreed that the engagement will be limited to certain specific procedures, it is referred to as an agreed upon procedure engagement. Agreed upon procedures engagements appeal to certified public accountants because a management or a third-party user specifies the procedures that the accountant will perform and want done, and then the certified public accountant will issue a report describing the procedures agreed upon with the client and the findings resulting from the procedures performed. What are the other audit and limited assurance engagements related to historical financial statements? Auditors often audit statements prepared on a basis other than generally accepted accounting principle or the International Financial Reporting Standard. Bases other than generally accepted accounting principle or the International Financial Reporting Standards for which reports may be issued are the reports that may be issued using the cash or modified cash basis, or the basis used to comply with the requirements of a regulatory agency, the income tax basis, the financial reporting framework for small and medium-sized businesses, or a definite set of criteria having substantial support. An example of a report on the income tax basis is shown in Figure 25-8 on page 816 of your textbook. Auditors are often asked to audit and issue reports on specific aspects of financial statements. The audit of specified elements, accounts, or items is much like an ordinary audit of financial statements, except it is applied to less than the full financial statements. Auditors may issue reports on debt compliance and similar engagement as a separate report, or by adding a paragraph after the auditor's opinion paragraph as part of a report that expresses their opinion on the financial statements. An example of a separate report on debt compliance is shown in Figure 25-9 on page 817 of your textbook. Please complete the required evaluation method for Chapter 25 as it will be part of your final grade. Use Blackboard to complete the requirements. You have reached the end of the course presentation for Chapter 25.